The Sensex and Nifty end about 8% higher in 2024, but the Midcap index gains over 24%, while the Small Cap index is up 29%. The Healthcare and Pharma index is the best performer of the year.
Indian equities make a smart recovery to end flat on the last trading day of 2024 after yet another choppy session. IT stocks fell the most, while healthcare and PSU stocks lent support.
Easy Trip falls after co-promoter Nishan Pitti looks to exit. Lupin gains 2% after it acquires an anti-diabetic medicine. In India, RVNL surges after bagging multiple orders from Indian Railways. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar and with me is Vinny. Hi, Vinny.
Hi, Reema. Thanks for that. And last working day of 2024. But 2025 is going to be exciting. I hope so, as exciting as 2024. But today the markets also, range-bound was the range is the game. For this week at least.
But it's good to see the intraday recovery, right? The Nifty recovered about 180 points from the day's low to close flat. So at the session's low, we were down quite a bit, 180 points. The mid-cap index ending absolutely flat. The mid-cap, the Nifty bank, though, was slightly under pressure, down close to about 0.8%. But you know what, guys? We're not looking at just today. We're trying to recap, the year gone by and get you up to speed with all the, the big action that we saw through the year. So let's straight away get to that. But before that, it's Hormus now, who is joining in to tell us how the markets fared in 2024, who were the outperformers, who were the laggards. Hormus.
You know, the Nifty ended with gains of almost 9% for the year. The bigger takeaway is the fact that it was the 9th straight year of positive returns for the benchmark index. Now, my friends would talk more about specific stocks, so I'll highlight some of the sectors that were the standout this year in 2024. And particularly one sector is the Nifty Pharma Index. And it is only in this last 1 month that the Nifty Pharma Index has seen a really, really strong move. And the index has emerged as the best performing index of the year, up 40% this year. It's gained in 4 out of the last 5 years, and this is also the best calendar year returns since the year of 2020 that the Nifty Pharma Index has seen. The similar performance is coming in from real estate as well. Another positive year for the index. It was up almost 80% last year, but a 35% gain on an 80% base is, of course, anybody would take it with both hands. And it has also gained in 5 out of the last 6 calendar years. Now, on the laggards bit, well, the FMCG index was a bit of a disappointment in today's session, of course, all through the year as well, be it the likes of HUL and the likes. The index was down only 0.5%, but it is only the first negative return that it has given since 2019. And the kind of moves that you have seen in the FMCG index is evident from the fact that since 2009, it is only the second instance that the index has given a negative calendar year return. Now, moving on to the broader markets, it was the mid-cap index and the small cap index that were outperformers compared to the Nifty. The mid-cap index was up 24% this year, and it was the 5th straight year of positive returns for the index, and almost 70% of the index constituents ended with gains in 2024. And lastly, the small cap index, another similar performance of 24%, outperforming the benchmark, and it has also gained in 4 out of the last 5 years. 2022 was a negative year for the small cap index, but also 74% of the index constituents ended with gains. So overall, sectorally, there were a lot of pockets of opportunities. The pack definitely led by pharma and real estate.
Thank you so much for that. Pharma and real estate leading this time in the sector-wise in 2024. But let's get across to our guest for today. We do have Jai Bala of CashTheChaos.com as well as Sudip Bandopadhyay, Group Chairman at Inditrade Capital, joining in with us. Thank you so much, gentlemen, for joining with us as always. Last trading day of 2024. Interesting one in terms of the recovery, like Reema was mentioning as well. Jan, let's talk about today's day in terms of the recovery that we've seen coming in. What are we watching out for here in terms of the Nifty now? Is this going to be something in a range that we should watch out for in the next couple of weeks? What is it?
Fair question, Vinny. So we are looking at a range of about 24,100. Just like last week, the Nifty hasn't done pretty much from last Tuesday. So still the same range as projected. But if Nifty were to break the November low before coming to 24,100, I think we are in for a much quicker and sharper decline. Anyway, the medium-term objective remains, not medium-term objective, I would say a higher time frame objective, remains the June 4th low, the post-election low of about 21,280. It's either going to come with or without 24,100. If the markets are hitting higher, watch resistance at 23,900 and 24,100, and after that, on a stretch, 24,700. So these are the range to watch for the next 2 weeks.
Sudip, the fall that we had starting October, we haven't quite recovered from it. We're still ending about 10% lower from our all-time peak levels that we hit towards the end of September, about 26,200 plus. What does that tell you about at least the near term going into Jan and Feb, when there are so many cues that we have to navigate globally and even on the domestic front?
I think it's going to be a volatile market even in Jan Feb. Look, there are major events lined up. Of course, we have our budget, which is coming on 1st February. Then we have the RBI credit policy. So I think these two are big events as far as domestic markets are concerned. And of course, we have the US Fed on one side and many other central banks, including Japanese central bank, are carefully looking at the rates in their respective countries. I have a little bit of apprehension as far as Japanese central bank is concerned, because at some point of time, I'm sure they are going to increase interest rates, and that may lead to some unwinding of carry trade, which will affect pretty much all the major global markets, including India. So a bit of incremental volatility can be witnessed if Japanese central bank increases interest rates at some point in time over the next 2-3 months. Beyond that, I think we will have to wait for the budget and the monetary policy to kind of really see which way the market will move after that. FIIs have been selling, and I don't see any reason why they will start buying in January, early January. Maybe the budget everybody likes and FIIs can come back, but I think we'll have to wait and watch that situation.
Okay, wait and watch that situation is the word coming in from Sudip. But moving on, we'll also get you the top large cap gainers and losers in 2024. Abhishek is here to tell us all about that. Abhishek, over to you.
Trent has been the top performer. It has more than doubled its stock price for 2 consecutive years. So it has delivered positive returns annually since 2014. M&M is the other gainer. It has seen the sharpest rally in a calendar year since, in the last 15 years. So Bharat Electronics, the PSU defense heavyweight, that's gained about 58% this year due to robust government spending on defense and significant order inflows that they have had. Bharti Airtel has been delivering positive returns every calendar year since 2019, but in 2024 the return that they have given is the best since calendar year 2017. Now Sun Pharma has outpaced the industry benchmark. A superior ROE profile that you saw for the company this year has led to the stock price outperformance. Now coming on to the declining side, IndusInd Bank has been the top loser in the Nifty. The rise in slippages on unsecured lending and its exposure to the microfinance sector has weighed on the stock price. Asian Paints has seen its stock come under pressure this year, and that's been hit due to weak demand, margin pressure and rising competition that you are seeing from new entrants. So high food inflation has disrupted the consumption patterns across India, especially amongst mass segments of consumer. So India's FMCG sector is expected to rebound in 2025 after the fact that high costs, slowing growth and inflation impacted the stock performance this year. So Nestle, Tata Consumer as well as HUL, they saw their stock price decline in this calendar year anywhere between 12 to 18%. Back to you.
Thank you so much for that, Abhishek. But, let's talk about some of these names. And I want to talk about the FMCG names. Overall, when you look at Nifty FMCG, that was also among the top underperformers coming in there. While in terms of stocks also, top losers on Nifty 50 were HUL, Nestle, Tata Consumers coming in on that front. Sudip, what are your thoughts on the Nifty FMCG side? What are we expecting this time in 2025? Some signs of rural recovery surely is coming in, but commentary hasn't been too upbeat so far.
We are positive on FMCG for 2025. I think we have seen the worst as far as FMCG is concerned. Look, India is a country with 140 crore population. Some of these FMCG companies are very well managed. They had a kind of a perfect storm in 2024 when initially there was a challenge in rural demand, and when rural started picking up, urban demand slowed down. They also had input price inflation, they got hit from all the sides. But I think things have started improving. Rural demand is coming back. Urban demand, we are expecting it to be back as well. Inflation is coming under control. In some cases, raw material prices are kind of getting under control and are expected to further moderate in the near future. Considering that they have corrected significantly from the peak levels, and last year they were actually down by 0.5% as far as overall index, FMCG index is concerned. I think some of these stocks, from a long-term investor's point of view, become attractive from their portfolio point of view. So yes, we are positive, and selective buying in FMCG stocks is being recommended.
Sudip, trend. It's been the big winner year after year. In 3 years, the stock is up 560%. How do you think it'll fare in 2025? Does it have legs to run more?
Well, as far as business performance is concerned, I'm sure it will continue to do well. The Zudio has been a running success, and they are getting into newer segments with artificial diamond and things like that. And I'm sure they will create a niche for themselves in these segments as well. But the valuation doesn't give me too much of a comfort as far as buying recommendation is concerned. So I will not recommend a buy at trend at these kind of multiples and these kind of valuations. But company performance is definitely going to be good, but may not be as good as is expected to retain this kind of valuation.
Okay, that's what we spoke about in terms of large cap companies, trend surely being the gainer coming in the last few years and last year as well. But what's happening in the mid-cap space now? Vivek is here to tell us the list of top gainers and losers.
Well, when you're talking about the mid-cap space, some of the returns have been significantly outsized. In fact, the top mid-cap gainer has seen your money triple in just one calendar year. So the top gainer as far as the mid-cap index is concerned for 2024 was Oracle Financial Services, or OFSS. The stock went up 201%, indicating that it has slightly more than tripled the investment. The next stock on the radar is Dixon Technologies. Remember, the entire EMS team and Dixon, with multiple partnerships that it's announced through the course of the year, saw the stock as well as valuations re-rate quite significantly. Over 2.7 times is what this particular stock returned for 2024. PB Fintech, despite the fact that the company saw significant news flow and saw significant volatility, ended the year significantly higher, almost 2.6 times higher. And BSE, remember, both exchange stocks did very well through the session, but BSE this particular year actually managed to end the year higher by 137%. RVNL topped out the list of top 5 gainers as far as mid-cap is concerned. The railway theme remained quite strong, and the stock gained over 135%. But on the other hand, there were quite a few stocks that also managed to erode shareholder wealth. Amongst the top laggards as far as the mid-cap index was concerned was Vodafone Idea, halving investor returns in just one single year. The other stock on the radar, of course, and most of these stocks are either from the banks or from the NBFC space with significant MFI or rural assets, and names like Bandhan Bank, AU Small Finance Bank, IDFC First Bank and Poonawalla FinCorp, all of them fell in the range of 28 to 34% in the last year itself.
Thank you very much for that. Jay, any mid-cap picks for 2025 over the near term and even over a medium term?
I'm still waiting for the markets to complete a correction. But out of the picks that have been highlighted here, I think PB Fintech and BSE Limited, they might still have short-term upsides to work with. They probably haven't completed their highs for 2024. So they might clock fresh 52-week highs in 2020, early part of 2025. But that will be an important medium to long term. That could be, I won't say that will be. But so, yeah, from a very short term perspective, slightly bullish on PB Fintech and BSE Limited.
BSE and PB Fintech from short-term perspective, hoping for good moves there. Thanks so much for that, Jay. And thank you, Jay, as well as Sudip for joining in with us on the show. Now, with that, it's time for a very short break. We'll get you the top corporate voices and more news on the other side. Welcome back to Markets Forward on CNBC TV18. Now let's shift focus to Easytrip. The stock is being under pressure today after the company's co-founder Nishant Pitti announced plans to sell his remaining stake via block deals. Verma, joining you with us to tell us more on what all is happening in the stock and why.
There's always a way Easytrip finds its way to the headlines, right? Be it Maldives or foraying into different businesses. There is a lot to talk about it. And this time around, news came in on Monday evening that Nishant Pitti, who is one of the co-promoters, planned to sell his remaining stake via block deals. That was the remaining 14% stake. However, only 1.2% of that stake was sold in today's session. Now, based on the data last checked, now at the time of its IPO, the shareholding in Easytrip was divided among Nishant, Prashant and Rikant Pitti. Now, Nishant and Rikant had majority of the shares, while Prashant had negligible shareholding. Post the IPO, Nishant and Rikant's stake fell to 37%, while Prashant's stake remained constant. And by June of 2022, both Nishant and Rikant gave 5% of their stake to Prashant, taking his overall stake to 10.5%. Now, as of December last year, more than 65% of Nishant Pitti's remaining holdings was locked up. And come March this year, that was over. And in September this year, the selling began when Nishant Pitti sold 14% in that block deal in what was an earlier plan to sell only 8%. Now, that fetched him a cool 920 crore rupees. Now, Pitti may have halved his stake, but who bought it? Not the institutions for sure, because the institutional holding from almost quarter to 7% at the time of its IPO is down to nearly zero. Now, but who bought it? Well, no prizes for guessing. It was retail. Now, take a look at this. Similar to domestic mutual funds, retail also began at around 6% at the time of its IPO. That stake has gone up to almost 34%. Now, retail technically owns 1/3 of the company. Now, in absolute terms, where there were 50,000 retail investors in EasyTrip during its IPO, that number has gone up to almost 10 lakh by December this year. Now, in January, Easytrip suspended bookings to Maldives following a diplomatic row, a move that was later reversed in October. However, during this period, the number of retail shareholders in the stock has doubled. Now, EasyTrip on numerous occasions has dangled this bonus issue carrot to keep the retail flock interested. They announced a bonus in February of 22. They announced another one in November. At the same time, they announced a stock split as well. And a recent bonus issue came in as early as October and November this year. Has the financials matched up to it? Well, not really, because the profit at the end of FY22 was 24 crores. Now it's 26 crore after making a brief peak of 50 crore. It has also been in the news for other interests other than its core business. Now, earlier this year, Nishant Pitti, along with Ajay Singh, the SpiceJet chairman, submitted a 1,600 crore bid for the now defunct Go First. He withdrew from that bid in his personal capacity in May, saying that he wanted to focus on the long-term vision of the company. Now, he also announced plans to, in September this year, to foray into manufacturing electric vehicles. Now, a travel company making EVs would leave many question marks, but then the kind of market that we were in back then, the stock went up 11% post the announcement, only to fall 6% the next day. So what next for EasyTrip? There are multiple questions to be asked. Will Nishant Pitti be able to sell his remaining stake? If he does so, will the other promoters follow suit? Will retail continue to pile in because of the bonus and the dividend and so on and so forth? And lastly, focus will be on the December shareholding pattern that should be up anytime next month. Now, it's almost been 4 years since EasyTrip went public. It has had its moments, both good and bad, but the trip ahead is anything but easy.
Thank you very much for that. Very well explained. Now let's move on to the other big standout feature of 2024, and that's been the capital raise frenzy that we've seen. Yash joins in to tell us a little more, because this year we've seen Indian companies raise a whopping 3.5 lakh crore via 438 issuances. Yash?
Well, it's been a fantastic year when it comes to fundraising through Indian capital markets. As you said, the headline remains to be a total fundraise of about 3.5 lakh crore through a total of 438 issuances. Speaking about the main board IPOs and the fundraising there, companies have raised about 1,62,800 crore via IPOs in 2024. The weighted average listing premium of these companies stood at an impressive 31%. Speaking about the SME IPO market, issuances increased from just about 109 in 2022 to 235 in 2024, and the amount raised through these SME IPOs jumped from about 1,900 crore in 2022 to 8,600 crore in 2024. Companies have raised a total of 1,13,100 crore via QIPs also in 2024, and names like Vedanta as well as Zomato led that charge on the QIP front. Overall, record high year for the funds raised via IPOs as well as QIPs in 2024. Let's have a quick look at the overall trend, which will include IPOs, FPOs, OFS, QIP as well as rights issue. And the numbers are 2024 versus 2023. Main board IPOs, amount raised was up 2.3 times. The number of issues were up 60%. SME IPOs, the amount raised was up 87%. Issues up 31%. OFS, the amount raised was higher by about 64%. Number of issues are flat. QIPs, the amount raised was 63% higher. Number of issues 11%. Rights issue, though some disappointment there, the amount raised was down 39%. Number of issues still up about 8%.
Okay, thank you so much for that, Yash. But before we wrap up this edition of Market Forwards, we get to some of the key corporate voices. First up on the list is Shriram Finance. The company says it would remain conservative on the growth estimates. Also, the NBFC will be looking at new sources of funds. Further, it expects loan growth of 15 to 20% in FY26.
Supriya Life Sciences maintains its revenue guidance of 22% on an annual basis. On the subject of China, the management said it's not worried about competition coming from China, despite 89% of its sales coming from exports.
That's not all. Vinati Organics guides for a 20% revenue growth in FY26 and FY27. In FY26, it expects its EBITDA margins to be around 26%. Meanwhile, the company is facing trouble from China due to its dumping policy, but it's expecting some relief due to government intervention.
With that, it's a wrap on the last edition of Markets Forward for this year. But don't go anywhere. We'll be back with more news and updates on the other side.